In this lesson, we'll be discussing cancellation of debt and how it impacts the tax return. After completing this lesson, you will be able to determine if a taxpayer has cancellation of debt that is in scope for VITA, determine if a taxpayer is solvent or insolvent, recognize tax documents associated with cancellation of debt, and describe the relationship between cancellation of debt and the 1040. Cancellation of debt includes auto loans, credit card debt, medical care, professional services, installment purchases of furniture or other personal property, mortgages, and home equity loans. A debt includes any indebtedness for which a taxpayer is liable or which attaches to the taxpayer's property. And generally, if a debt for which a taxpayer is personally liable is canceled or forgiven, other than as a gift or bequest, the taxpayer must include the canceled amount in income. And this is when we'll see that canceled debt on the tax return. There are two types of cancellation of debt issues that are in scope for VITA: non-business credit card debt and home mortgage loan. Now, the Pub 4012 does a great job of taking you through this process step by step, but understand that we still do expect you to call a supervisor anytime that you deal with these issues, especially for home mortgage loans. So any other type of cancellation of debt other than non-business credit card debt or home mortgage loan will be out of scope for VITA. Let's first talk about non-business credit card debt. A taxpayer may have credit card debt that was canceled by a creditor or a lender. Generally, if a taxpayer receives a Form 1099-C for canceled credit card debt and was solvent immediately before the debt was canceled, then all the canceled debt will be included on Form 1040, line 21, other income. Lenders or creditors are required to issue Form 1099-C if they cancel a debt of $600 or more. If the debt canceled is less than $600, some lenders or creditors may send a letter or some other form of notification to the taxpayer. Generally, taxpayers must include all canceled debt amounts, even if less than $600, again on the Form 1040, line 21, other income. Here's a Form 1099-C. In box 2, you'll see the amount of debt discharged. In box 4, you'll see a debt description. So anytime you have a Form 1099-C, you want to first look at box 4 to see what the debt description is and to see if this is a kind of debt that is in scope for VITA. So here we see it says credit card debt, and we know we can most likely proceed, but there's still a few other conditions that we need to check first. In box 5, it says, if checked, the debtor was personally liable for repayment of the debt. Let's first go over some cancellation of debt terms, and this will be important in our process of deciding whether or not it's in scope for us. The liabilities are amounts owed, including mortgages, home equity loans, vehicle loans, credit card debts, past due mortgage interest, and real estate taxes. Assets are the fair market value of homes, cars, bank accounts, IRAs, 401ks, furniture, clothes, jewelry, etc. So solvency is the condition in which assets are greater than liabilities, whereas insolvency is the condition in which liabilities are greater than assets. So only taxpayers who are solvent are in scope for VITA. Insolvency is out of scope for VITA. In order for us to determine whether this is in scope for us, we're going to use the insolvency determination worksheet as a resource, and this is found in the Pub 4012. Here's what the worksheet looks like. As you can see on the left-hand side, we have a few assets listed, and on the right-hand side, we have some liabilities listed. So these are just categories that can give the taxpayer an opportunity to think about and estimate how much they have of each of these assets and liabilities. And that way, at the bottom, we can do total assets minus total liabilities to see if they are solvent or insolvent. And remember, we should always do this worksheet prior to starting to input cancellation of debt so that we can figure out whether or not this will be in scope for us before we proceed. Let's go through an example. John made a deal with his credit card company to pay $2,000 on his $7,000 balance, and the company agreed to take it as payment in full. In January of the current year, John received a Form 1099-C from his credit card company reporting $5,000, the amount of debt canceled. John was solvent immediately before the debt was canceled. How does John need to report the $5,000 from the 1099-C? Since John is solvent, the return is in scope for us, and John will report the entire $5,000 as income on Form 1040, line 21 as other income. So in the Pub 4012, there is a great screening tool for non-business credit card debt, and so we'll look at the steps right now together. So the first step asks, did the taxpayer receive Form 1099-C, cancellation of debt, or other documentation if less than $600 from a creditor, and is the information shown on the form or document correct? If no, these issues are outside the scope of VITA, and we need to refer the taxpayer to the IRS or a professional tax preparer. But if yes, go to step 2. Step 2 asks, was the cancellation of debt related to a business? If yes, this will be out of scope for us. If no, go to step 3. Now keep in mind, if debt is connected to a taxpayer's self-employment income, this is considered related to a business. So the answer to this question would be yes, if they had debt connected to their self-employment income. But if no, we're going to step 3, which asks, does box 3 of Form 1099-C show any interest, or does box 6 indicate bankruptcy with code A? So if yes, this return will be out of scope. And note, if the bankruptcy box is not checked, but the taxpayer has subsequently filed bankruptcy, we'll answer yes to this question. If no, go to step 4. Step 4 asks, was the taxpayer insolvent immediately before the cancellation of debt? And so this is where we'll use the insolvency determination worksheet in the Pub 4012 and interview the taxpayer to determine if they were insolvent immediately before the debt. If they are insolvent, we're going to answer yes, and the return will be out of scope for us. But if they're solvent, then we're going to answer no and go to step 5. The cancellation of non-business indebtedness or cancellation of debt, the amount in box 2 of Form 1099-C, or an amount less than $600 provided in other documentation, must be reported as ordinary income on Form 1040, line 21, other income. No additional supporting forms or schedules are required for reporting income from canceled credit card debt. So if we get all the way to this final step, then we're saying the return is not out of scope for us, and the canceled non-business credit card debt needs to be reported on Form 1040. Let's look at another example. Simon incurred $15,000 in credit card debt. He was unable to pay the monthly payments. In September, the credit card company agreed to accept $8,000 from Simon as full payment. So Simon received a Form 1099-C from the credit card company for $7,000. He was also personally liable for the payment of the debt. Simon was not insolvent immediately before the cancellation of debt, nor has he filed for bankruptcy. What is the taxable amount of Simon's canceled debt that will be reported on Form 1040, line 21? So that $7,000 will be reported on his tax return. And this is the amount of debt that was canceled and reported on Form 1099-C. True or false? If the fair market value of a taxpayer's assets is less than his or her liabilities, that is what is referred to as being solvent. So if assets are less than liabilities, that's solvent. False. If liabilities are greater than assets, a taxpayer is considered insolvent. Now let's talk about cancellation of debt for home mortgage. A taxpayer may have home mortgage debt that was canceled by a creditor or a lender. Taxpayer may exclude from income certain debt forgiven or canceled on their principal residence. And this will occur on Form 982. If the canceled debt qualifies for exclusion from gross income and the debtor stays in the home, the taxpayer may be required to reduce the basis of the home by the amount excluded. If the property was taken by the lender or given up by the debtor, the taxpayer will need to determine a gain or loss. So these are our main two scenarios for home mortgage canceled debt. Similar to non-business credit card debt, the Pub 4012 has a very helpful screening tool for home mortgage debt cancellation. So we'll go through these steps together. Step 1 asks, did the taxpayer receive Form 1099-C, cancellation of debt, from their home mortgage lender, and is the information shown on the form or document correct? And no, answer yes if the taxpayer has received a Form 1099-A and a Form 1099-C. And we'll talk about this in more detail in a second. So if no, then this return is out of scope for VITA, and we need to refer the taxpayer to the IRS or a professional tax preparer. But if yes, the taxpayer has this form and the information is correct, then we'll go to step 2. Step 2 asks, did the taxpayer ever use the home in a trade or business or as a rental property? If yes, the return is out of scope. If no, go to step 3. Step 3 asks, does box 3 of Form 1099-C show any interest, or does box 6 indicate bankruptcy with code A? Note, if the bankruptcy box is not checked, but the taxpayer has subsequently filed bankruptcy, answer yes to this question. If yes, the return is out of scope. But if no, go to step 4. Step 4 is where we determine if the discharged debt is qualified principal residence indebtedness. So we have to ask all of these questions. Was the mortgage used only to buy, build, or substantially improve the taxpayer's primary residence? Was the mortgage secured by the taxpayer's principal residence? Was the mortgage used only to buy, build, or improve the residence, not to pay off credit cards, purchase a car, pay for tuition, pay medical or dental expenses, vacations, etc. Was the mortgage not more than $2 million or $1 million if married filing separately? So if the answer to any of these is no, then this return is out of scope. But if the answer to all of these is yes, then we'll go to step 5. Step 5 gets us to the conclusion that the discharged debt is qualified principal residence indebtedness, which means we need to complete Form 982. Now, if the taxpayer remained in the home where they had the canceled debt, then we're going to reduce the basis of the home by the amount of the canceled debt. But if the residence was disposed of, then the taxpayer may be required to report that disposition on Form 8949 and Schedule D. Let's look at an example. Amos purchased a home for $140,000. His lender agreed to forgive $45,000 and Amos remained in the home. He meets all of the requirements for the debt to be considered qualified principal residence indebtedness. What form does Amos need to fill out, and where will the canceled debt appear on the 1040? Amos needs to fill out Form 982 to exclude the canceled debt from income and to reduce the basis of the home. The canceled debt will not appear on the 1040 because Amos can exclude the debt from income. So because Amos is remaining in the home, he'll actually lower the basis of the home by the amount of canceled debt. So here's a Form 1099-C. Again, in box 2 is the amount of debt discharged. In box 4 is a description of the debt. So remember, whenever we see a 1099-C, we want to first look at the description in box 4 to see if it's either non-business credit card debt or mortgage loan. And these are the only two things that are going to be in scope for us for VITA. In 5, we'll see a box checked if the debtor is personally liable for the repayment of the debt. What is in scope for VITA for home mortgage loans? Canceled home mortgage debt is only in scope if excludable as qualified principal residence indebtedness, in which case the canceled debt will not appear on Form 1040. It will appear on Form 982. Now let's talk about disposition of a home. If a taxpayer does not make payments owed on a loan secured by property, the lender may foreclose on the loan or repossess the property, resulting in a disposition. The disposition is reported on a 1099-A and might accompany a 1099-C. Here's a Form 1099-A, abandonment or foreclosure. In box 2, we have the balance of principal outstanding. In box 4, we have the fair market value of the property. Box 5 will tell us whether or not the borrower was personally liable for repayment of the debt. Let's talk about a few terms related to debt. Recourse debt holds the debtor or borrower personally liable, which means the lender can collect what is owed even after taking collateral by garnishing wages or levying accounts. Non-recourse debt does not hold the debtor or borrower personally liable, which means the lender can only pursue collateral. And these terms are going to help us figure out the sales price, but otherwise we really don't need to know what they mean. So when we have a disposition, we're going to have either a gain or a loss. And we're going to figure out the gain or the loss through this equation. Sales price minus cost basis equals a gain or a loss. And so the sales price depends on if it's recourse debt or non-recourse debt. If it's recourse debt and box 5 is checked, the sales price is the lesser of the balance of principal outstanding, which is box 2, or the fair market value, which is box 4. So the lesser of those two. If it's non-recourse debt, so box 5 is not checked, the sales price is the balance of principal outstanding, which is box 2. Now, cost basis is something that the taxpayer should either know or be able to get by calling their lender, but this is something that they're going to have to provide to us that won't be found on one of the forms that they bring in. And the taxpayer should have documentation of any adjustments to their cost basis. Let's look at an example. Jason lost his home to foreclosure because he could no longer make his mortgage payments. At the time of foreclosure, he owed a balance in box 2 of $170,000 to the lender, and the fair market value, box 4, of the property was $140,000. What would the selling price be if Jason's loan was recourse debt? And what would the selling price be if Jason's loan was non-recourse debt? So if it's recourse debt, then the selling price would be $140,000. So the lesser of the fair market value or the principal outstanding. If it's non-recourse debt, then the selling price is just going to be the principal outstanding. So when there is a loss, if the disposition of the home results in a loss, it is non-deductible. A non-deductible loss will not appear on Form 1040. It will appear on Schedule D and Form 8949. And for the adjustment, it will be Code L. This will be reported on the capital gain or loss item worksheet. If the disposition of the home results in a gain, it is only in scope if the gain is excludable, and the excludable gain will not appear on Form 1040. It will appear on Schedule D and Form 8949, and there will be an adjustment code H. For gains, we'll report on the sale of home worksheet, and we'll follow the same rules as sale of home for determining if it's excludable. Ben purchased a home for $200,000 with a recourse loan. At the time of foreclosure, his principal outstanding balance was $195,000, and the fair market value was $125,000. In January of the current year, Ben received a Form 1099-A from his lender. There was no canceled debt. How will this impact Ben's return? So the foreclosure of the home will not impact Ben's 1040 because the loss on the disposition is non-deductible. So we're actually going to use the lesser of the fair market value or the balance of principal outstanding. So we're going to use that $125,000 amount. And we take into consideration the cost basis of $200,000. So there's a $75,000 loss. The loss will still need to be reported on his Schedule D and Form 8949, but the loss will not be deductible. Let's quickly take a look at some common taxpayer scenarios. In scenario 1, we have what's called a mortgage workout. In this case, the taxpayer receives a 1099-C, and the debt is partially forgiven through a loan modification. This is in scope only if the taxpayer can exclude the income, and they'll do this on Form 982. In this case, the taxpayer stays in the home. So we would be reducing the basis of the home by the amount of canceled debt. In scenario number 2, we have a home foreclosure. The taxpayer receives a 1099-C and a 1099-A. Debt is partially forgiven, and it's in scope if the taxpayer can exclude the income. Again, they'll do that on Form 982. In this scenario, the taxpayer leaves the home, so they're going to report a disposition as a sale of home resulting in a gain or a loss. This will be in scope if the taxpayer meets the VITA requirements for sale of home. So disposition of a home can occur independent of cancellation of debt, in which case the taxpayer only receives a 1099-A. So this is what y'all saw in your sale of home lesson. In scenario 3, we have a home foreclosure. The taxpayer only receives a 1099-A and no debt is canceled. The taxpayer leaves the home and reports a disposition as a sale of home resulting in either a gain or a loss. And this is in scope if the taxpayer meets the VITA requirements for sale of home. The taxpayer only receives a 1099-A, and keep in mind that sometimes the taxpayer is unsure whether or not canceled debt accompanies the foreclosure. It's always best to contact the lender and verify if the taxpayer should be receiving a 1099-C along with their 1099-A. But sometimes the taxpayer will only have a 1099-A. In scenario number 4, the taxpayer only receives a 1099-C, but they do have a home foreclosure, so there is a disposition of the home. Sometimes the taxpayer will only receive a 1099-C even if they've left their home. And in this case, the 1099-C should include all of the information necessary to report cancellation of debt and the disposition of the home. So all of these scenarios might seem complicated when you're not looking at the Pub 4012, but when we use our screening tools in the Pub 4012, it really does lead us through step by step for every single scenario and circumstance. But now that you've completed this lesson, you should be able to determine if a taxpayer has cancellation of debt that is in scope for VITA, determine if a taxpayer is solvent or insolvent, recognize tax documents associated with cancellation of debt, and describe the relationship between cancellation of debt and the 1040.